We talked about consolidation and what's happening outside of what you're doing, but do you see yourself playing consolidator across each of these businesses, across each of these segments?
We have consolidated a lot on the TV side of the business. If you look at our portfolio, we have bought and we have done greenfield. On the OTT side, I do not see any sellers out there today because anybody who is a content owner runs his own OTT platform. There is no much value accretion in going and buying an OTT aggregator because it's at the end I'm a content company and I give value for the content that sits out there. But having said that, in the future, definitely I see consolidation will happen in the OTT space as well. There will be strategic alignments on the film production side that things will form.
Are you looking at something at this point?
We are actively considering at any given point in time.
Okay. But is anything on the anvil that is likely to close anytime soon?
Nothing that I can, not in the current fiscal. But those are more strategic relationships. They are not acquisitions per se.
Sure.
So from that perspective, nothing that I can talk about. On the music side, or the music publishing side, there are a lot of acquisition opportunities that will become available in the next 6 to 12 months kind of time frame, in my view. And our latest baby, that is the live entertainment business, will kick off in November this year itself.
Okay. So, you exited businesses that were no longer viable for you. In terms of new businesses or new forays that you could consider outside of the big one that you're betting on today, what does the future hold?
So anything, so we are transforming ourselves from a pure play audiovisual content company to an entertainment powerhouse. So I want the maximum mind share of entertainment of the consumer. Which means if you go to a restaurant to eat, that's my competition. If you are outside playing basketball, that's my competition. So, I mean, the sky's the limit.
You have a lot of competition there. I
have a lot of competition, yes.
So what are you going to add into your arsenal to take on competition, not just from the traditional competitors, but from each of these spaces that you just talked about?
So the live entertainment business is going to be the next big one from our stable.
And what is the aspiration on the live entertainment business? If you can give us more details and color of what you intend to do there.
So there are no official studies that are out there, but my estimate is that it is as big as television businesses. Because it's currently totally unorganized and there are very, very few select organized players in that sector. Entry of someone like Z, we think we can consolidate that a lot and bring a lot of growth from that market.
So consolidate, when you say consolidate, you mean bringing...
Go out and buy IPs.
Go out there and buy IPs and also buy enterprise? I mean, you've got a few large players who are in that space, I mean, comparatively to that industry.
So if they have some intellectual property that is of long-term value, yes, definitely we'll consider that.
Okay. So what can we expect over the next 12 months post-launch as far as the entertainment business is concerned? Which aspects are you going to be focusing on?
So currently it's going to be focusing on, a large part of it is going to be theatre and music.
Okay.
These are the two things that we're going to focus on. Third thing we want to focus on is education.
Okay.
And then finally probably venture into food as well.
So when you say venture into food and education, set up restaurants of your own, or what's the plan there? Or
license our brands for restaurants to start on their own.
Okay, so go the franchisee route as far as restaurants are concerned. And education?
So education, the reason why I said education is because every year you get this hundreds and thousands of kids who are trying to figure out what they want to do after they finish schooling. And we think there is an opportunity for us to bring the educational institutes and the parents and these kids together through ground events, if you want to call it that.
So you're not setting up an educational institute. I mean, you're not...
I have a sister concern already doing that, so I don't need to set that up.
Exactly. Yeah. So what will this be? This is going to be sort of an offline-online platform of connecting?
It's more going to be an offline-online platform of connecting students and connecting educational institutions with students.
Okay. So what kind of investments would a business like this require?
So as of today, we have committed about 2 billion rupees of working capital to this business.
Okay. And where do you believe that this is going to require significant incremental investments, or you think
I don't think at peak it will need more than 2 to 2.5 billion rupees of...
Okay, so the bulk then will continue to be put into or pushed into ZEE5?
Absolutely. That will remain the biggest.
Okay, so now let's talk about margins. And you know, the question is, and you pointed out yourself that you can do 36% plus if you wanted to. How? You know, this is, no, seriously, because nobody else is delivering those kind of numbers in a market like this, especially, and you've been able to consistently deliver. I mean, I've been looking at the EBITDA margin numbers: 30% FY17, 31% FY18, 34% in the second quarter of FY19. What are the levers? I mean, how much of this is pulling out costs, and how much of this is being able to actually drive?
Oh, none of it is cost anymore.
None of it is cost anymore. So
I mean, we are more efficient because the only area where our cost efficiency comes in is that we don't go out there and buy very expensive formats, unlike my competition. So I don't end up paying format fees to international production houses. But beyond that, our investments in content will be in line with anybody else's. Maybe 8 to 10% cheaper, but not anything beyond that.
So how do you deliver these numbers?
I think what we have done is we have broad-based the broadcasting business to a very large extent. Pretty much available in every language that has a market big enough. Kerala will be our latest launch, which will happen in December this year. If you look at our positioning, in the last 6 years, we went from a 12% market share to a 19% plus market share in the last 6 years. That has also aided a significant part of growth to that. These genres in themselves...
So if I hear what you're saying, that you don't believe that there are downside risks to these numbers. You're only saying that there are upside levers to being able to improve on these numbers.
For now, it is only upsides. I can only see upside levers.
So you don't believe that, you know, you will be forced to tell me that I can't do 34, I can't do 30. You believe that you're in this 30 plus trajectory for, you know, the foreseeable future?
I will come to you if I needed to invest beyond the 30% into any of those businesses. I'll first come to the investors and tell them that.
But you don't feel the need for that just today?
No, not for the next 2 to 3 years.
And so you still believe you can deliver on a 30% plus EBITDA margin?
Absolutely.
Okay. So upside risks on margins, upside risks, upside potential on subscription revenue, upside potential on advertising revenue. So business is looking good for you. What are you hearing from the business, you know, in the business environment in general? Because one hears different stories from different industries, some more pessimistic than others. Your numbers would suggest that you're fairly confident and optimistic, but what's your own sense about the state of play as far as corporate India is concerned?
I think first and foremost, the corporate India is waiting for some intervention to happen from outside to help their businesses grow. And that's never a good idea. I mean, I don't mean any disrespect to any of them, but I think our DNA, which we've taken or inherited from Dr. Chandra, has been to chart your own destiny and just work towards that. We never question ourselves by saying, oh my God, nobody's delivering this kind of margin, so how can we? So we just have to, we just want to. And we believe in it that much that we do it ourselves. We have had no intervention from anybody outside of our industry, whether it be government, whether it be international, etc., etc. But we are charting our own destiny and we are working towards that.
And you know, you're uniquely positioned because you're focusing on, of course, on growing the domestic market, but you also have and have had significant international aspirations. So explain to me where you see the business and where you see your international expansion over the next few years.
So we have already entered into a lot of geographies where we were seeing that the South Asian market was saturated. And we were not getting growth, and that is visible in our subscription numbers even now. What we started doing at that point is we identified geographies that are dependent on importing content rather than creating content in the local markets.
Okay.
And we went out there and we repurposed our content. When I say repurposed, means it's re-edited, dubbed or subtitled depending on the market's needs. And we offered it to the local audiences beyond the South Asian diaspora. And all of the advertising growth that you're seeing that is coming in is coming from that business now. So that gives us further confidence that how can we take Z5 now to the world diaspora and offer another offering to them. And that's what we want to work towards going forward.
Okay. So, before I close, let me get you to sort of visualize for us what the next 5 years could look like. You've given me a target of 10,000 crores in revenue over the next 3 years. You've said about 27% in digital advertising revenue
for the industry.
For the industry in the next few years. What would it mean for you?
Well, for us, I would think that the margins will improve further beyond the 30% mark for us.
In the short term, in the medium term?
In the three-year term that we
in the 3-year term. So you have a 3-year roadmap that you're working with?
Absolutely.
And what are the key pillars of that 3-year roadmap that you're going to focus on?
Revenue, revenue, revenue.
Okay. So the revenue we've already discussed, that's the 10,000 crore rupee number that you're working with. What will be the drivers that you will focus to ensure that you get there?
People. People. I think what we've successfully done and that we didn't touch upon for the reason of success is that I now have an independent CEO for each of the verticals that I run, and they run it pretty much independently. Very dedicated teams, so there is no overlap between the broadcasting team or the digital team, the live team or the films team. And these 4 verticals run very independent of each other, reporting into me. So it's these 4 people, along with my CHRO and my CFO, that have built a very excellent depth in the team for us to continue to deliver.
Okay. Let me end then by asking you about the news business, because that's a business that continues to see a fair degree of stress and pressure. What's your own outlook on the news business in specific, and what's the aspiration for you on the news side?
Well, I don't personally run the news business myself, but at least on the commercial side, I think there is still a long way to go for the industry to further consolidate. And become truly news-based organization and not just.
So will you play consolidator in the news business? There's been a lot of speculation that talks are on, then talks were off, talks are back on. So
see, our mantra has always been, if it's value accretive, we are there. We are absolutely willing to play that consolidation game there as well.
So anything on the cards?
Very small ones right now. Mostly in the regional expansion portfolio.
Okay, nothing mainstream at this point in time for the news business. Okay, I started by asking you, you didn't give me an answer, but you did say that anything in excess of 30% plus will be used towards investing in Z5, at least that's the ballpark that you're working with today.
Yes, plus whatever the Z5 is generating on its own. Plus all the opportunity cost of the content that I give to Z5.
And EPS accretive in 3 years?
5 years.
5 years, okay, 5 years. All right, Punit, we wish you the very best of luck. Thanks for speaking with us on CNBC TV 18, and we hope to check back with you on each of the stories that you've articulated here for us on the program today. Thanks very much for your time.
Absolutely, most welcome. Thank you for having me on the station again.
With that, it is time for us to wrap up the CNBC TV 18 special from all of us here. Goodbye and many thanks for watching.